Hey gang, it's Black Friday. We're finally here. In today's video, I'm going to show you a low-risk entry opportunity on the Russell 2000, and I'm going to show you how you can make 6.5 times more money trading the small caps instead of blue chip stocks. Also, watch the end of the video. I got a special surprise for you. Talk soon. What we're looking at is a chart of the Russell 2000 index. The Russell 2000 follows the small cap stocks. Now, when I say small cap stocks, I'm not talking about penny stocks and I'm not talking about over-the-counter stocks. I'm talking about stocks that have a market cap of about $2 billion. So they're not exactly small companies. They're actually medium-sized companies, companies that are big enough to get attention but not big enough to where institutional traders are calling them the darlings of Wall Street. Imagine Netflix and Amazon about 10 to 15 years ago. That would qualify as a small cap stock under the Russell 2000. So why am I talking about the Russell 2000? Why is it important? Why am I making a big deal about it? Well, here's the deal. I explained in yesterday's video that when stocks sell off, usually the small caps start the sell-off, followed by tech and then followed by blue chips. And conversely, after stocks sell off and are ready to go back up again, guess what? We see the same thing. We see small caps starting the rally first, followed by tech, and then followed by blue chips. And the reason this is the case is because speculative stocks, and small cap stocks are more speculative than tech and blue chips, tend to see action first. They tend to see selling pressure first, and they see accumulation first, because they're more speculative. Activity, whether you're buying or selling, usually begins with speculative stocks and then follows through to larger cap and blue chip stocks. So that's why we're looking at the Russell 2000. And what's interesting about the Russell 2000 is we're seeing a 1-2-3 pattern. This pattern, the 1-2-3 pattern, typically precedes market turnarounds. So when we see a 1-2-3 pattern, we're looking for trading action to begin in the opposite direction. What's interesting about this 1-2-3 pattern is the number 3 point is higher than the number 1 point, and that's very significant. And what the 1-2-3 pattern is really a double bottom. We see the first bottom here and a second bottom here, and the second bottom is higher than the first bottom. That's very significant. We're not seeing this on the tech yet. We're seeing this on the small caps, but not in the tech just yet. So this is very significant, and it's telling me we may see upside in the very near term. So where do we look to buy? Where's a low-risk entry point? And it happens to be, and the number 2 point happens to be right below the 200-day moving average. And the 200-day moving average is a barometer for bulls and bears. So the best thing to do right now, the best thing we can possibly do is sit tight and wait. And we want to wait till the market, till the Russell 2000 gets to the 160 price level. And once it gets to the 160 price level, somewhere around the 160, 161 level, and holds that level for a few days, that would be the time to buy. That's very, very significant. So the first reason we're following the Russell 2000, it's much more speculative than blue chip stocks, and it tends to lead the market higher. Now, there's a second reason why we're talking about small cap stocks. If you look at this table, it's showing you the average gains from top Russell 2000 stocks versus top gainers from the S&P 500. And as you can see here, the top gainers over 1 quarter gained about 285%. While the S&P 500 only gained about 43%. And we've seen differences like this over the last 20 years. On average, small cap stocks or smaller stocks, again, these are not over-the-counter stocks. These are stocks with $2 billion of capital under them on the average. So we're looking at stocks that are not too small. But overall, we're seeing gains in smaller stocks that are 6.5 times the size of S&P 500 stocks. And that's very, very, very significant. All right, it's here. It's Black Friday, and I promised you something special. I created a 2-hour course to help you take advantage and to trade smaller cap stocks the right way and to experience potential gains that are 6.5 times higher than blue chip stocks. You can finally register right now for the special Black Friday edition of my Billionaire Breakouts class. Now, this is a limited event and it's going to be taken offline very soon, so don't miss out. Have a great holiday weekend, everyone.